If you're someone who's struggling with market structure, you're going to want to watch this video. I don't care if you think you already know it. I promise you, this video is going to help you out a lot, especially if you are struggling to find the right side of the market. Maybe you think you're bullish and then it's now bearish, or vice versa. This video is going to be for you. So make sure you stick around, smash that like button, hit subscribe if you're new, and comment something down below. I promise you're going to get so much value out of this. So let's jump in. Thanks for meeting me on the charts here, guys. So before you guys click off, like I was saying, this isn't going to be just a basic market structure video. This video is for those who are struggling with market structure. I'm going to show you my own little twist on things, and it isn't just going to be the basic, higher highs and higher lows, lower highs and lower lows. There's going to be more in depth to it. That's hopefully going to allow you to be on the right side of the market, because I know a lot of you are constantly not knowing when to go long, when to go short based on that market structure, and hopefully this can help. So what I'm going to do right off the bat is draw out market structure quickly here, just for those who maybe don't know about it. And if you do know about it, nice little refresher. So for bullish market structure, we're going to be seeing higher highs and higher lows, right? These are going to be the structure that we're seeing. And then for bearish structure, we're going to be seeing the opposite, right? We're going to be seeing lower lows and lower highs. The place a lot of people get messed up, and this is something I was super guilty of up until the last year or so, maybe a little bit longer, was not paying attention to where we have just come out of. Okay, so what I mean by that is structure is going to remain intact until we get to a high time frame area. Okay, so for example, let me draw another thing. Market structure will remain bullish, right? It will remain bullish until we reach either a significant liquidity pool. Okay, so let's just say we have an old high over here. Okay, market structure will remain bullish until we reach that area, or let's say a big imbalance or point of interest. Okay, once we reach that area, all of the market structure that was bullish is then going to be liquidity for the opposing side. Okay, so for example, you can see how people would have been buying here, buying here, buying here. But where people start to lose is when the market has already reached its final destination. People are still trying to long, right? And then that's how you end up getting caught and spanked by the other side, right? And the same thing will go for, sellers, bearish market structure, right? We're trending bearish, right? Everyone's looking to short, But once we reach that area, so let's say it's an old low, a significant low, or a big point of interest, okay, so an order block or an imbalance, then all of this structure is going to be liquidity now for the buyers. And the market will just literally repeat this, okay? And I'm going to show you some prime examples of where people would have got caught simply following market structure, okay? So this is a trade that I actually caught on EuroCAD. I'm going to show you where I exited the trade and why I was no longer looking for shorts on this. Okay, so let's just take a look at EuroCAD. If I scroll up here, just give me 1 second and I will delete this and see you guys in 1 second. Let me take a minute to talk about one of the best new prop firms in the industry, Think Capital. Think Markets, a fully regulated broker, has entered the prop space. This is huge for us traders. With over 15 years of broker experience and regulation, this gives us another prop firm we can trust. We can trade right from TradingView, or you can use the classic MT5 with up to $300K in max allocation, and they also offer to US clients. I know this is amazing news to my American trader friends. You can even withdraw your profits right to your Think Markets broker account. If you use the code ARMTrading, you will get 15% off any challenge. Please make sure you sign up and create an account, then at checkout the code will work. The code is also case sensitive, so make sure you type it in exactly how it is shown. Let's get back to the video. So here's a perfect example of bullish market structure, okay? So here we have this big bearish leg, right? We have this big bearish leg. But in order for price to retrace, it has to temporarily flip bullish to get up into the area where it can then reverse, right? So if I go down to the 4-hour time frame here where it's a little bit more clear, you can see what I mean, right? All of this structure is remaining intact, right? You could argue that, oh my God, we are bullish, right? Imagine the stop losses of all of these traders. They're going to be over here. But pay attention. We have now come into that point of interest that I was talking about in the markups a few moments ago, right? So now we're anticipating shorts. So if I fast forward this, you can see that the market starts to shift to the downside, and all these people here that were long if they are still trying to long, they're going to get caught on the wrong side of the market, right? So here you can see the market. What does the market start to do? We start to shift in the opposing direction. If I go over here on the line chart, you can see we are trending bullish here. Now we've had a structure shift and we are now trending bearish, right? We are now trending bearish and we're expecting the market to do the same thing all the way down to the next liquidity pool or point of interest. So if I just go and clear this for 1 second, you guys can see exactly what I am talking about, right? So here we have a beautiful area. We have a beautiful area. We're starting to create that beautiful market structure, right? We have this order block right here. We have this liquidity right here. And we can see that the market ends up running this liquidity pool here. So this is where I ended up entering my trade. So I ended up entering this trade here. And the area I was targeting was this liquidity pool all the way down here at these lows here that started the bullish move here, okay? Now, hold on. If you're a little confused, I'll explain to you as the video goes on, okay? So this is where I entered the trade, and you can see that the market ends up retracing, and we end up coming all the way back down into these lows. Now, this is where I want you to pay attention. Just like this area was bullish and market structure is bullish, watch what's going to happen to people who are still trying to short this bearish trend. And this is why it's so important to focus on the high time frame and not just get caught on these time frames like the 4 hour, etc., because you're going to miss the rest of the equation, right? So if I mark out this imbalance right here, this is an area where most people would be looking to short, right? Because this is the last kind of high that when it made the low, right? So more than likely people are going to be looking to short here. Now this is where people go wrong. Look at what we have just done. We have ran this liquidity pool. This is a liquidity pool that I was waiting for the market to smash. It also was a nice order block right here that was responsible for the big move to the upside, okay? So if we're looking at this like the bearish order flow, or we're looking at this like the bearish market structure, then since we met our liquidity objective, or we met the area we think the market is going to react from, now we can expect for all these people to get taken out of the market, right? And if I go and play this out, you can see exactly what happens. We come up to here and we have a reaction, and then the market starts to push to the upside very, very aggressively, because where are the stop losses of the traders going to be? They're going to be above here. They're going to be above here. And once the market reaches the destination, then the market structure starts to shift in the opposing direction. If I go to, let's say, an hourly time frame, you can see it's a lot more clear, right? We're just creating higher highs and higher lows, right? Where we are doing the opposite on the other way, okay? So now I'm going to show you one more example, and hopefully this can drill it into your brain. Here we have another example on GBP JPY. You can see here I have this imbalance highlighted, okay? And if we jump down to the daily and the 4 hour time frame, you can see we have this nice liquidity pool over here. So this is an area where I'm expecting the market to reach for. If we look on the 4 hour time frame, you can see how, just like the last example, bullish structure is being kept intact, right? Now, when I'm looking at this, I'm anticipating this area to be the bullish objective, and then I'm expecting all of these stop losses to then become liquidity for the opposing side. So I'm expecting a push like this somewhere into this general area, and then I'm expecting structure to shift down into these stop losses. Now, this is where a lot of you are getting caught, because you're just simply looking at the 4 hour or the hourly or whatever it is, and you're not paying attention to the higher time frames. So let's say the market pushes up into this area, and you can see we have ran the stop losses of the traders, and then we're waiting for the market to start to shift. Here you can see we finally broke structure below this low, okay? If I just go and mark this out like so, and if we go over to the line chart here, you can see we're clearly trending bullish, and then we reached the liquidity objective, and then we broke to the downside, okay? So from here, all we're doing is waiting for the market to retrace, and this could be an area where we start to look for shorts, right? If we see the market retrace up into this general region, we can then look to take the market lower into the stop losses of those traders that were trading the bullish price action, right? If I just go and play this out, you can see the market retraces up into this general region, and then we start to shift to the downside, okay? We end up respecting this general region, and then we start to push downwards, okay? So let's see right here, we get another structure shift. So now we're starting to make clear bearish moves to the downside. We had the bullish ones, and now we're having the bearish ones. So this would have been a beautiful entry according to my trading strategy. If I just wanted to set a pending here, put my stop loss above these highs here, and look to target these areas down here, this would have been a beautiful trade because I'm now expecting GJ to shift in the opposing direction. You can see that the market ends up coming up into this imbalance, and then we start to sell off. Now let's see if there are any other entry opportunities that could have been taken. If I just go and play this out, you can see again, we're still shifting to the downside. If we go and mark this low out here, this looks like the one that'll most likely get hit just because this is a clear draw that caused this big move to the upside. And you can see how market structure is just constantly being respected on the way to this liquidity pool, right? And then you can see we finally take this out. And then what happens after that? If I just go and play this out, the market structure that was respected over here, right? If we're paying attention, see all this market structure, guys. If you were still trying to short after we ran this area, you're going to be on the wrong side of the market again, okay? It's literally like a game, and it just goes from one side to the other. So I hope this video helped clear up your market structure struggles. Remember, market structure will remain intact until you reach the liquidity pool or the high time frame point of interest, such as an imbalance or an order block, and then that structure will then become liquidity for the opposing traders. If you are interested in how I trade, you want to learn more from me, and maybe you enjoyed this video, you want to say, hey, what else does he got? Make sure to check out the link in the description. Check out the ARM Trading website. We got testimonials on there. We got the programs on there, and I'd absolutely love to see you guys in there. So without further ado, I hope you all enjoyed the video. Smash that like button, hit subscribe if you're new, and comment some positivity. I appreciate you all so much, and I will see you in the next one.